Nice having two microphones. Let me do a quick check, make sure it's still working. Make sure it's still working. Yep, it's working. Okay. We're done with Alcoa, right? Yeah. So, like I said, I wrote down Alcoa. So when it does find the bottom, I want to jump in. Thanks, very kind. You got it private. So when it finds its bottom, I want to jump in on it. Now, before you say, well, actually, I don't have any money at the moment. The reason why I don't have any money, let's find out what we have going out this week. We get Macy's in the money, AEO is in the money, Walgreens in the money. So it's three companies I'll be losing this week in this particular account. This account here, one, two, three, four. Freaking awesome. Four companies I'm losing those for. Next account, one, two, three. Three companies I'm losing. So I have plenty of space to buy some Alcoa when she hits that bottom, turns around, and goes up. All right. Now, I like to do that on Monday. So I'll be checking it on a Monday to see what Alcoa does. So you guys remind me, for those of you guys in the morning trading group, we're going to take a look at Alcoa over the weekend and see if it's that good for jumping in on Monday. Where are we? All right, so that's Alcoa. Let's get some more of these questions out of the way. Raldo, to get weekly premium, do you close the option trade alone or wait for expiration and repeat the trade? Now, Raldo, that's a great question. Let me give you a little bit of a history lesson. Okay. The great John F. Kennedy once said, we cannot answer the questions of tomorrow with the information we possess today. What do I mean by that? Well, I have no idea what the stock's going to do on Friday afternoon. I do my buying on Monday. All right. I look for that 1%. Great. What's the chart telling me? Charts up, charts down. It should be bouncing off and go to the upside. That's what it should be doing, hypothetically speaking. If it does, great. I'll be back into cash Monday. Wonderful. I won't know that until 3 o'clock tomorrow afternoon. So until 3 o'clock tomorrow afternoon, I really don't know. But you're kind of right. Okay, I buy the stock on Monday. If I could be out on Friday, great. I'll be back into cash on Monday. That's a great quote. You like that one? So here's the thing. If I buy it on Monday and on Friday it's not in the money, I'll take that stock and do the exact same thing next week. I'll take it and I'll do it the next week. And I'll keep doing it the next week. That's like AEO, Ian Win I've been carrying since the beginning of April. Okay. Now I have no intention of selling at a loss because remember the 5 rules. Never buy something you don't want to hold long term because you just might have to. Never sell at a loss. It defeats the purpose of the whole game. Make sure the company has 20 years or more of increased dividends, weekly options, because I like weekly cash flow. I'm not into this monthly cash flow crap. The numbers just don't work the way they do with the weeklies. Weeklies, I can get 1% a week. Monthlies, I cannot get 4 or 5% per month. I can't get it. It's like very rarely is it available. And with the weekly, I only have to guess where it's going to be in 5 days. A monthly, I have to figure out where it's going to be in 4 or 5 weeks. Yeah, no thanks. That doesn't work for me. Okay. So I'm retired. I have no problem whatsoever jumping online every 10 to 15 minutes. Hey, Mary, what do you think about CVS? Well, we'll take a look at CVS in a few minutes. Okay. Um, Actually, we'll take a look at CVS in a couple seconds. But that's what I'm looking for. Safe, predictable, consistent 1% per week. And if I can find a decent stock, don't get me wrong, Alcoa is a great, decent stock. It's been in business for over 100 years. Okay. They have no problem whatsoever increasing their dividends consistently. And if everything works out and I can get 2%, hell yeah, I'm doing that one. It's like, look, here's the 30-day top, 30-day bottom. What's coming next after a 30-day bottom? Well, investors like you and me say, wait a second, Alcoa is cheap at this price. Okay. So once we say, hey, it's cheap at this price and we start buying, yeah, the stock's going to start going up. I'm only going to want that 1%. 1% is a hell of a lot easier to get than 3, 4, 5, 8, 10, 10, 12%. 1% is easy. That's all I'm looking for. 1% a week, safe, predictable, and consistent. All right. I have no problem whatsoever holding on to Alcoa, especially if it's going to give me 2% a week. All right. CVS. Let's take a gander at CVS. Now, CVS is almost like Walgreens. There's a CVS and a Walgreens in every major city in the United States. Okay. It's the major drug puller for the elder generation. We got to get our drug somewhere. Okay. All right. We need our Prozac. We need our, we need our little blue pills. I mean, hey, we are addicted to that prescription drug. Now, I personally don't take any. That was a great explanation why you prefer weeklies. Thank you very much. So, prescription drugs, you only get a couple of choices: Walgreens, Walmart, CVS. I don't know where else you buy them. I don't take any prescriptions whatsoever, so I really have no clue. The barber is joining us. Cool beans. I have no idea what you do, barber. All right, let's take a close look at CVS. Always, always, always. First thing takes 2 seconds. 2 seconds. High, low, where was it? Where is it? Great. Really, it's that quick. Okay, it's right here, right now. The low is down here, 52, and the high is way up there at 82. Okay, I'm not at the bottom and I'm not at the top. I'm somewhere in the middle. Fine. Let's progress to the numbers. What are the numbers we're looking at? $58.95, the purchase price. If I'm buying it tomorrow morning, $58.95. Well, what's the closest strike price? Closest strike price is $59. Well, it's going for $1.05. That's almost 2%. So 59 and 59 is what was that, 118? All right, so we're just a smidge under 2%. I don't mind. Okay, a smidge under 2% is nice. Interesting flavor. Water, lemon, and honey. Supposed to be good for me. Anyway. All right. A year ago, we're at 73.30. Topped off in the beginning of January at 83.18. Bottomed out end of May at 52.84. All right, 52.84 was the bottom of the year. Well, take a look. What's the movement? Up, down, up, down, up, down. But you can't, seriously, you can't mistake that for anything else. Let's go to the last 30 days. Check it out, 30 days ago. Way up here. Down, up, down. Well, she's on the upside right now. Great. 30-day bottom. Well, it's not a 30-day bottom, but it is a low. Excuse me. All right. 30 days ago, we topped off at 61.98. Our 30-day bottom, 55.80, shoots back up, 62.04, drops back down to 57.38. Now we have 2 days to the upside. All right, well, here's a high right there. There's a bottom, 2 days the upside. Great. There's your invitation to jump on in. Now, I have a bunch of money sitting around doing nothing, so I think I'll actually buy some of these. And we'll actually do them right now. Why the hell not? That's it? Okay, we got $9,000 to play with. CVS. All right, the 59s. I don't know for the 58s. No, I don't want this week. That's tomorrow. I want next week's. Here we go. The 58s for 158. Okay, cool. So I'm going to do the 58s. 58s right there. 5. All right, so I'm going to do 2 covered calls CVS. All right, the 100s. 2 August 24. That is next Friday. The 58 call, CVS, 5703 limit order. No. I want market order. Market order. The maximum profit. Well, check out the excuse me, the break-even stock price, 57.03. Well, the current price right now is 58.95. My break even, so anything above 57.03 is going to be a profit. Okay, fine. Maximum profit I'm going to make off of this is 194. So I'm going to get my calculator out real quick, clear that, $194. What is it costing me? Well, this is a margin account, okay? So margin account, you're paying less money. So I'm paying 5,542. 554, whoops. Divided by 5542 comes to a grand total of 3.5% for the week. Now, here we go. It's CVS, number one. They've been in business for over 100 years. They're in every major city in the United States. It's the drug capital of, well, it's one of the drug capitals of the United States. You get CVS, Walgreens, Walmart. I don't know what other pharmacies there are, but it is what it is. It's a 3.5% trade. Why the hell not? Off to the races. It should fill. All right, outside market hours. I have no idea what he just said. So it looks like I'm going to have to do a limit order outside market hours. Same thing. Same trade. So outside market hours, it will fill first thing tomorrow morning. All right. I could have done more. Let's change it to 3. Why not? Let's change that order to 300. All right. All right, so 300. So I'll do 3 contracts, CVS, a little over $200. Why the hell not? All right, let's go back to my other account right here. All right, that being said, I like CVS. Why not? All right, Marvel. Ooh, Sheila, you want to take a look at Marvel, huh? MRVL. Yeah, I'm going to say no to Marvel only because she's in a little bit of a downturn. Right. A year ago, we were at 63.79, bottomed out in November, beginning of November at 45.56, topped out in the beginning of March at 85.42. Now, look at the last 90 days. I mean, that is a pattern and a half. Up, down, up, down, up, down. Very slow movement to the upside, but really fast to the downside. Look at almost 3 weeks to the upside, 3 days down. 3 weeks up, 3 days down. 4 weeks up, 4 days down. It's a distinct pattern. James, no sound on YouTube again? Really? It's working. There we go. There, now it's working. All right, sorry about that. It has a tendency to do that every once in a while. Turn that one off. Don't get me wrong, those little microphones are awesome, but every once in a while when the battery dies, you get no choice in the matter. Hakuna's here. Hakuna from Sweden. I can't eat spicy food either for my esophagus. Yeah. Yeah. I'm thinking to myself, it looks good. I remember the last time I had it was really good. Is it really going to bother me? And apparently it is. All right. So we got the sound fixed. All right, Marvel. Take a look at Marvel. All right, Sheila. Almost forgot. Last 30 days, right here. Definite up-down movement. Great. See it? Can't really mistake it. 30 days ago, we're over here. 68.20. The 30-day high is right up there, 76.46. And now we're at our 30-day bottom. And we're looking for a new bottom. Once we find that bottom, it might be a great opportunity. The 64.27, looking at the 64s, $1.88. Oh, that's more than 2%. Hell yeah. Let me put Marvel, let me write Marvel down. MRVL. So I like 2% trades. I do. Don't get me wrong, I'm shooting for 1%. That's my goal, 1% per week. But if I can get a 2, hey, I'll take it. Why not? I like 3.7. Recon, so do I, but not as often. Ford is way down now. Oh, Secretariat. Let's take a look at Ford. Now, we looked at Ford last week. Holy shit. That's a huge drop. All right, so let's take a quick look at Ford. I see in the chart, fine. Now let's look at the numbers. 11.23, the 1150s are going for 15 cents. So that's over 1%. The 11s are going for 35. Take 23 off of that. You're looking at 13. Yeah, you'd be better off with the 1150s. I think I'm going to jump on some Ford. And I think I have some money left over. Holy shit, 11,000 bucks. Let's jump in some Ford. Only because I like Ford. I do. And if they're offering me that at this position, with a big, huge drop like that, look at this drop. With a drop, like we're talking about Ford, okay? We're talking about a company that's been around for over 100 years. We're talking about a company that didn't take any bailout money from the U.S. government, okay? Okay, Ford has been around for over 100 years. They've seen World War I, World War II, Korea, Vietnam, Afghanistan, Iraq, Iran, all that Desert Storm crap over there in the Dust Bowl. Okay, you've seen the stock market crash. It's seen the Great Depression, and it's still in business today. Why not Ford? So, like I said, why not Ford? It's been in business for over 100 years. Last 30 days, here we go. 30 days ago, we were at 12.12. We got the 30-day high at 14.85. There's a big drop. There's a big drop for a reason. What's the reason? Does anybody know? Anybody know why Ford dropped as much as it did? I really honestly don't care, because when you see a drop on a company like this, usually something big happened. It's usually something big, or it's just the market maker taking advantage of a bad report. Because if you look closely, look really close, okay? Yesterday, she opened up at 13.73, hit a high at 13.88, and ended up closing at 13.67. What's the reasoning to drop it from 13 all the way down to 11? There's probably no reasoning whatsoever. But the market maker has the power to do that. So, if the market maker decides, hey, I'm going to drop the price only because I can, what happens? Well, if you look behind that, you're going to see the blue line back there. See these blue lines right here? Those represent volume. All right, that's how many shares are trading. So let me show you something a little interesting. I show this every once in a while. I find it to be enlightening. Now that's WBA. I want to look at Ford. All right, here's Ford. Now, look at the blue lines down here at the bottom. That's the average day's movement. See it? Look at today. Huge, huge move. But let's not look at that at the moment. First thing I want to show you is this right here. Okay? The bid and the ask. The bid is 11.22. The ask is 11.23. It's only a 1 cent difference. So keep that in mind. Okay? Now, if you see over here, this number right here, that is the average daily volume of Ford shares that trade every single day. 54 million shares. ALGN. Remind me in a few minutes. I've never heard of ALGN, so it's probably going to be a no, but I'll take a look at it. Now, the average volume is 54 million shares. Now, there's only a 1 cent difference between the bid and the ask. That's the spread. So clear that, and we're going to take 1 penny, that's the spread, and we're going to multiply it by 54 million shares that are traded on a daily basis. Okay, so the market maker every single day on Ford is making damn it. Every day the market maker is making $500,000. $540,000 just to the market maker. He's only getting 1 penny per share. Okay? So he gets some bad news. So what does he do with the bad news? Well, he takes advantage of it. How does he do that? Well, instead of just opening it up at $13.50 or $13.20, he drops it all the way down to $11.78. And what happens? 261 million shares traded today. So here's a question. Multiply by 261 million shares. So the market maker today made $2.6 million. Yesterday he made $500,000. Today he makes 2.6. Why? Because he got some bad news and he took advantage of it. Now, out of those 260 million shares that traded today, how many were buyers? How many were sellers? Now the market maker dropped it from 13 down to 11. Great. If I'm a buyer and I see that, oh hell yeah, I'm going to buy. Are these all buyers that bought 250 million shares or 260 million shares? Or are those sellers that are panicking? What do you mean Ford's dropping? Let me get rid of it. Blah, blah, whatever. Whatever the reasoning is, 260 million shares traded today. Okay, why? Did one of the factories blow up? Did one of the did something happen in the Ford world that caused a huge drop like that? Ford had its highest volume yesterday in more than a year. That's no reason for the stock to drop today. No reason whatsoever. So why did the market maker do it? What, did he get divorced and he need to pay off an ex-wife? I have no idea. But anyway, don't always believe everything you see. They had earnings. But still, even if the earnings are down, is that a reason to drop the stock price so much that a whole bunch of people, we're not talking about, 2 or 3, we're not talking about 2 or 3 times the amount of volume. We're talking from going from 63 million, okay, 63 million to 260 million. That's a huge freaking jump in volume. And who profits off of it? The market maker. Okay, the market maker did it because the market maker, well, just because they missed earnings, big deal, whoopee. So he drops it and he gets all these people buying and selling. It's a freaking ingenious thing to do. Great, business as usual. All right. So for the last 30, 60 days, he makes $500,000. Well, today he made 2.6 million. Pretty ingenious if you think about it. All right, let's go back to where we were. All right, so that's Ford. I just said I was going to buy some Ford. What was I doing? I like it at 11. Okay. So at 11, what is that getting me? You've got to be kidding. That's a hell no. The numbers is absolutely horrible. The 1150s. 320, 5500. 320 is the profit. What's it costing me? 5576. Comes to a grand total of 5.7%. Hell yeah, it's Ford. Why the hell not? My break even is 1118. At the moment, it's 1123. Well, I'm going to say yeah, why not? But as a matter of fact, I think I'm going to do 20 contracts, 2,000 shares. All right, 640. Okay, so that may or may not fill tomorrow morning. We will find out tomorrow morning. It is what it is. All right, that being said, what else do we got? We got like 15 minutes to go. I got 99 messages. Holy cow. Can I sell a covered call in units less than 100 shares? No, you cannot. Sorry. Can we look at Ford? We just looked at Ford. Thanks. Wave Runner, James, can you please buy the stock and sell the covered call in one order? Yep, we already did it a couple times. Hey, got this message. This account can only place closing transactions only. What does that mean? That means you either sold too many or you have a margin call. One or the other. You're not allowed to buy anything. You have no buying power. I'm new at this. Obi, keep coming back, keep learning. I'm here every single night. How about Jack? I have no idea who Jack is. No, I have plenty. All right. 86. Correct. You just went over a few more inexpensive companies. Yes, I did. I have no money in the account. Yep. Thank you. Obi. Yep. Thoughts of Eli Lilly. Eli Lilly's out of my price range. Terribly sorry. It's a nice company if you have the kind of money. Do I ever sell puts? Yes, I do, but I don't go over them here. Here, I want to keep simple, safe, and predictable. Once you get that, all right, there are a lot of things you can add. You can add calendar spreads. You can add spreads. You can add back ratios. You can add diagonals. You can add straddles and strangles. A lot of things you can add to this. But first, at least, find a trading strategy that's simple and easy and is profitable. Come on, come on. Okay, so as I was saying, okay, this trading strategy here that I'm teaching you now, I consider it as a stepping stone. If you're going to jump into this little world of trading in the stock market, why not do it with something that's simple, safe, easy, predictable, all that kind of nice, neat stuff. And if you do it right, you make 50% per year, 1% a week. Okay, once you get that perfected, yeah, then throw in some puts, then throw in some straddles and some strangles. Okay, they have more risk, they take more time to understand them. So you're trading your time for money. So make sure when you trade your time for money, you're doing it from a place of more power, so to speak. Okay, so if you're making 50%, we're using this simple strategy here, great, fine, jump onto something else that's a little bit more complicated. Now, when I say I created it for a 9-year-old, it had to be simple and it had to be safe. Predictable, consistent, all of those. And then number 5, no way that she could lose. Remember, my daughter was 9 when I taught her how to do this. Okay, never buy something you don't want to hold long term. Never sell at a loss. Make sure there's plenty of increased dividends. Make sure the company is consistently profitable. I like 20 years. 20 years, there's over 300 companies that have 20 years of increased dividends. Weekly options, I want to get paid every single week. I don't want any of this monthly bullshit. I don't. I want weekly cash flow. And then make sure the numbers work. What do I mean by the numbers? If I'm buying it here, I'm selling it there, is that more than 1%? Great. That's what I want. 1% or more every single week. All right, let's keep going. But he does others. Yes, I do other stuff. I just don't do it here. Not in this strategy, though. You're correct, Recon. Thank you. What do you think about PayPal? No. I bought 1,500 shares this morning, up 10%. Now, do you think I can break too? Okay, so Ibrahim, okay, it ain't a profit until you take it. So if you bought 1,500 shares, it's up 10%. Take the profit, don't take the profit. I honestly can't tell you what to do. Okay, but here's the thing. Nobody ever went broke taking profits, and it ain't a profit until you take it. Okay, so if you like PayPal, hold on to it. You don't like PayPal, take the profit and run. I honestly can't tell you what to do. I could, but I'm not going to because I don't know anything about you. And I don't want to give you wrong advice. I think I am. I need to change ASAP. Okay. Bobby, no problem. Margin is very risky if your position. Yes, margin is risky. I suggest you note that. The chart on Bud, B-U-D, what the hell? What the hell? I don't think I've ever bought Bud. And alright, $60. Bud, 61. Yeah, there you go. That's probably why. That's tomorrow. Next week, the 61, $1.05. Oh, the 62. Okay, barely 1%. Interesting. Last 30 days. This thing's all over the place. I don't like the choppiness. Okay, look at all the gaps. Okay? Gap down, gap down, gap up, gap up, gap up, gap up, gap up. Well, they're all gap ups. That's pretty cool. Yeah, she's still too high. I thought she was getting ready to come down. Sorry. I've never done Budweiser. And don't get me wrong, I don't know why, so let's go check. What the hell is this? B-U-D, Budweiser. When you say Budweiser, you said it all. Okay, May. What do they pay once a year? Wait a second. Once this year, once last year, once in 22, once in 21, once in 20, twice in 19, twice in 18, twice in 17. Okay, so they were paying twice a year. Now they're only paying once a year. So I'm going to say no to Budweiser, because if they're paying once a year, they've already paid it, and they're not going to pay it again for another year. Nah. Because you have no idea. What happens when the stock goes down? What are you collecting? You're collecting nothing. Alright, so no to Budweiser. Sorry. Alright. What's next? James, call out those $15 stocks again. I got a pen and paper. Recon, seriously. We look for 30-day bottoms. What's wrong with 30-day bottom? I like 30-day bottoms. I'm sure shit not going to buy it at a 30-day high. I don't do that thing. You know, you buy it high, wait to go higher. Yeah, no, I don't do that. James, do you spread your trades out with different stocks or load up on what looks best? All right, Wave Runner. You've been here a few times, so you probably know that all my trades are based on the calendar. That's it, the calendar. Okay? Now, why do I base it on the calendar? Because, see each one of these little green dots? That represents an EX date. An EX date is the last day the stock trades before the dividend is paid out. Now, there's only two reasons the stock moves. One is a known reason, the second is an unknown reason. What's an unknown reason? Unknown reason is a natural disaster. Hurricane, tornado, typhoon, earthquake. Something that can upset a corporation. Or, how about springing a leak? An oil leak in the middle of the Gulf of Mexico, like British Petroleum did. Nobody knew that was going to happen. Or how about when Exxon Valdez crashed up in the Northwest? Nobody knew that was going to happen. Certain things happen that you can't plan for. You can only react to. Those are unknown reasons. They make stocks move, an unknown reason. Okay. What is a known reason? Well, we have a whole bunch of them. Okay, we have what's called an earnings report. We know when the earnings reports are coming out. We have dividends. We know when those are coming out. We have cyclical seasonality. What is that? Okay, winter, spring, summer, fall. You cannot honestly tell me that a company runs the exact same in the summer as it does in the winter. Okay, why does Hershey goes up in the first week of February? Well, you get Valentine's Day and then you have Easter right around the corner. Why does White Watches go up in the first of the year? Well, that's self-explanatory, isn't it? Why do gas stocks go up in the right during summer vacation? Well, that's when a lot of people, let's alone a lot of families take vacation and go for a drive. Why do oil stocks go up in March? Well, because you can buy oil on any time during the year, but we all in the north turn our oil heaters on at the same time, October, November, December. October, November, December, January, February. Oh, what happens in March? Well, you're out of oil. Guess what you got to do? You got to load back up again. We all turn them on at the same time. We all don't fill up at the same time. But come March, we're all empty. So oil stocks go up in March. Certain things happen predictably throughout the year. That is called seasonality. That is a known reason. Me, particularly, I like dividends because they happen every single year. Every 90 days. Most companies pay every 90 days. And if they're consistent and they consistently increase, well, great. I know when the stock is going to have its dividend. So if I like Kinder Morgan on the 31st, I'm going to want to buy it 2 weeks before the dividend date, which is the week of the 15th on a Monday. And then I'll be able to take advantage of getting the premium for this week. If I get my target, great. If I don't get my target, I'll do it again here. If I get my target on Friday, great. If I don't, I'll do it again here. So I get a premium, a premium, a premium, a dividend, worst case scenario. And I'll take it into Friday. If I have to take it again, I'll do it again. And then I'll do it again. And I'll keep doing it until it hits my exit target. My exit target is always more than what I paid for it. It makes no sense to sell something for less than you paid for it. It defeats the purpose of the game. All right. ALG 3218. Shall I sell everything? Sell everything except for your wife, dude. Jimmy. Hi, Jimmy. Has no volume on YouTube. Again? Really? Hello, hello. Yes, it does. It's working. Don't. I be doing covered calls on everything, and I don't buy any stock unless I do hundreds. Okay. No sound on YouTube. Felix, we already took care of that one. Hey, yo. Hey, James and everyone. That's Wildcat Sam. Joe, how you doing? Corp. Do you trade options and futures? I don't do futures, but I do options. Wow. Macy's. Uh-oh. I missed a whole bunch of questions. Sorry, guys. We got like 3 minutes left. Go. Thinkorswim. How much? How? Blah, blah, blah. Chat, is this guy related to Michael Burry? No. Ford sell-off. Interesting. Missed quarter earnings. Yep. Up, down 35%. You think it's a reversal? Spider? I don't know. Don't care. Don't do spiders. Sorry. No predictability to them whatsoever. They don't pay dividends. And if it goes down, you get nothing. So what else we got? How about waste management? All right, Arrow, we can take a look at it tomorrow. We got like 3 minutes left, and I got like a whole bunch of questions I haven't gotten to yet, so I want to get to those questions first before I look at anything else. Is there going to be a reversal on spider? Don't know, don't care. I don't do spiders. A little bit out of my price range. How do you hedge delta using futures? Ooh, that's a good question. I don't cover that here. Are you going buying and selling every week? Why not just hold the stocks? Oh my God. Archie, did you honestly ask me that question? Okay, I got a question for you, Archie, specifically for you and for only you. Ready? Okay, you tell me what stock I can buy that will give me a 50% or more increase on a yearly basis. And it will allow me to use some of that money on a weekly basis to pay my bills. I have no desire whatsoever to buy and hold anything. Okay? When you get to a certain point in life, okay, which I'm at this moment, all right, you go to your class reunion, you talk to your class buddies, and this person died, that person died, this person died. All of a sudden, everybody you knew, everybody you grew up with is dead or dying. What the hell am I going to put my money into something, wait 5, 10, 15 years to spend it? Hell no. I want cash flow. Only way to get cash flow is from companies that actually pay out dividends, which is sharing their profits. Great. Those ones I'm looking for. There's about 300 of them. Plenty for me to choose on a weekly basis. Okay, I buy a good, decent stock. I sell somebody the rights to buy it from me for the exact same amount of money I just paid for it. I collect a 1% premium. That comes to over 50% per year. I have not yet found a company, let alone a couple of dozen companies, that pay 50% per year every single year consistently. Okay, you may find one or two, but then you're cherry picking. You can't, there's 9,598 stocks in the stock market. Name me 5 that's actually going to increase 50% every single year for the next 10 or 15 years. They'll be more than happy to buy something and hold on to it. No, it doesn't work that way. Okay? I buy, I sell, I make a profit. That profit allows me to live comfortably. Without that, I'd have to go back to work. I've been working since I was 13. I'm 60 years old. I have no desire whatsoever to punch a time clock and work for someone less, yeah. No thanks. How about I just go to the next question? Are you only trading options weekly? Yep. I like weekly cash flow. Only way to get weekly cash flow is from something that gives you weekly cash flow. Monthly options don't give you weekly cash flow. Okay? Just don't do it. If you have another way of making weekly cash flow, fine, let me know. There's a list of weekly dividend companies. Yep. Kuchi, did you say 5% for the Ford trade? I believe so. 5.73% for that Ford trade that I just did. But that Ford trade that I just did was on margin. Okay, excuse me. It tasted much better going down. It did. Oh, wow. So that Ford trade, okay, was a margin trade, which means half the money was mine, half of it belonged to my broker. Okay, I like the trade. I like Ford. It's been in business for over 100 years. I have no problem whatsoever buying it. I think, hypothetically, this was just a shot in the dark. I think it's going to bounce tomorrow. But I'm only looking to hold it for a week. And here's the thing. If it fills tomorrow morning, I get that 5.7% right away. Now, I have a debit card and a credit card attached to my trading account. So that 5.7% I just made on Ford, on that trade just now, automatically goes to my credit card, and my debit card allows me to pay bills. Allie, you want to have a conversation? You want to jump in and talk with the group? Great, wonderful. Send me your phone number. We'll have a conversation first before I invite you on. Okay? Because I have no idea who you are. I have no idea what kind of contribution you can make to the crowd. And yes, Kutchi, that was a 5% trade on Ford. Recon, Archie, True, God, David King, blah, blah, yep. AT&T. Didn't we look at AT&T earlier? I'm not looking at anything else because we're past 11:30. I'm just trying to answer some questions. Very hard to find stocks, good entry points on a weekly basis. CMG, no, it's not. Okay, I've been doing this for over 15 years. Now, 20 years ago, I was doing something totally different. Okay, I came up with this trading strategy when my 9-year-old daughter wanted to learn how to trade. So I had to come up with something that was simple, safe, predictable, consistent, and no way that she can lose. This is what I came up with. It's been working so good, that's all I do. Because I can do 5 or 10 minutes a day, which is less than an hour a week, and make 1%. That 1% is a big fat number. 1 hour a week gives me a big fat number. That's what I'm looking for. Okay, if you have something better, I'm more than happy to take a listen. But I haven't found anything that works better. AT&T does. All right, we'll take a look at AT&T again tomorrow. See, it'd be very hard to find stocks with a good entry point on a weekly basis. That's not true. I missed a bunch. Sorry. Oh, rotary girder. Really? I've been big on QYLD for years. That's a big fat lemon, in my opinion. Let me tell you why. Let's go take a look at QYLD. I'll show you why this is a lemon and a half. QYLD. Number one, it's a monthly. So, if I was going to do QYLD, I can only do a covered call once a month. It's at $17.19 at this moment in time. So, if I was going to do the 17, I would collect 30 cents. Now, at 17, okay, it's 17.24. So if I sold the 17s, I'm getting 30 cents. But I'm losing, look at it, I'm losing 24 cents right at the top, which means I'm walking away with 6 cents. 6 cents on a $17 stock. That's not even 0.5%. But it gets worse than that, because that 6 cents, now I have to stretch it out over 22 days. 22 days is 5 weeks. Okay? Is it 5 weeks or 4 weeks? It's 4 weeks. No, because there's 5 trading days per week. Alright, so anyway, so it's 4 weeks. So I got to take that less than 0.5%, divide it out through 4 weeks, then I got to figure out where the hell this thing's going to be in 30 days. Yeah, no thanks. But it gets worse. Hold on. If you order now, you get 2 for the price of 1. So we're going to go to QYLD. QYLD. Okay, so here's the dividends for QYLD. Now, we're going to go all the way back 2014. Great. They're paying dividends 2014. Only 10 years. Okay, so let's see how profitable they are. Hypothetically speaking, if they're profitable, the dividends should consistently increase. Okay, it starts out at 26. Then it drops to 19. Wait a second, isn't that going the wrong way? 19, 26. Oh, and it drops again. It goes from 26 to 25 to 21 to 22 to 20 to 24 to 14 to 23 to 16. What the hell are you thinking? This is going the wrong way. There's no consistency in this whatsoever. But it gets worse. Okay? 15, 17, 20, 22, 18, 22, 16, 17, 20, 14, 13. Yeah, give me a freaking break. 15, 13, 10, 12. All over the freaking place. No consistency whatsoever. But wait, it gets worse. Okay, we're going to check out the summary for QYLD. Take a look. Now, if you've been paying attention, okay, if you've been paying attention, I like a safe, predictable, consistent 1% per week. Now, you may or may not have excelled in math, but 1% a week comes to over 50% a year. What do you get in QYLD? You're getting 11.6% for the year. Are the dividends consistent? No. Are they continuously going up? No. Are you getting a decent return? No. QYLD, in my humble opinion, is for those people who don't want to take advantage, don't want to take control of the money and say, hey, I don't want to do it, you do it, give me what you think. Yeah, no thanks. QYLD is a big freaking lemon in my opinion. What the hell are you thinking? I had to use that once tonight. Alrighty. Come on. I can maybe shoot one more video before the night's over. Alright, so that's my humble opinion on QYLD. Okay, QYLD, VOO, SCHLD, JEPI, there's a whole bunch of them. All same pieces of crap. They pay you a monthly dividend. The monthly dividends aren't consistent. They don't consistently go up, which means if they're not going up, that means they're not profitable. Okay? They're just barely treading water. They give you less. Okay, so they give you 20 cents this week per share. Next month they give you 14. Next month they give you 10. Next month after that they give you 23. There's no consistency whatsoever. Sorry, I just don't like QYLD. There's a lot of them like that I don't like. How many different stocks do you hold at one time? Well, I have 6 different accounts. So I have one account that has 4, I have one account that has 6, I have another account that has only 24. Totally different strategies though. This is the only strategy that I share publicly, and I share 2 accounts. One is a margin account, one is a cash account. So it gives you an idea what the difference is between the two. Now, I do not suggest you do a margin account until you understand the risks and rewards that go along with it, because you're borrowing money from someone and you have to pay that back. If the stock goes down, you lose your money, they don't lose theirs. Leave me a hay and other stocks you know of. All right. You did it now. Yeah, thanks, Michael. Don't get me wrong. I mean, if you think about it, there's some stuff that's good and some stuff is just crap. I mean, seriously, if you're going to invest your money and you do not look at what the history is or what they're paying, well, it's your own damn fault. If you're looking at a company and you see that the dividends aren't consistent and they aren't consistently going up, well, what do you think that means? Okay, if you're continuously profitable, well, you share your profits. Great, you share your profits. Well, the profits should get higher and higher. If the profits aren't getting higher and higher, they're not doing their job properly. All right. I don't do spiders, so I really couldn't tell you. So you buy and sell every week. I'm confused how you get this 1%. Archie, let me go over this one more time and let's see if you can grab it, because it's really not that difficult. It was created for a 9-year-old little girl. So we're looking at Macy's. Macy's, quickly, the ask, this is the price that I can buy it for tomorrow morning. It is right up there. See it? $16.52. Okay? Now, to get a weekly 1%, I look for a decent company. I like Macy's. They've been in business for over 100 years. I have no problem whatsoever holding on to them. Okay, that's number one. Make sure it's a good company. Never buy something you do not want to hold. Okay, simple. Never buy something you don't want to hold long term, because you just might have to. Now, the longest I've ever held anything was 9 months. Okay, I bought it, it went down, floated around the bottom a little bit, it came back up, I got out, and I still made a profit off of it. Number one, never buy something you don't want to hold long term. Number two, never sell at a loss. Okay, Macy's, I got no problem with Macy's whatsoever. Macy's $16.52. If I buy it at $16.52, sell somebody the right through what is called a covered call, one of the safest trading strategies there is. If I'm buying it at $16.52 and I'm selling it at $16.50, I'm making 36 cents per share. Do I really care about the stock? No, I do not. Am I willing to hold on to it if I have to? Yeah, if I have to. I don't want to, but if I have to, I will. But here's the thing. Buying it for $16.52, I'm selling somebody the rights to buy it from me for $16.50. I'm losing 2 cents right off the top. Okay, 2 cents. We take 2 cents off the premium, so instead of taking 36 cents in, I'm only bringing in 34. Okay, great. What is 34 cents? Not a whole hell of a lot, now is it? Don't be so quick to judge. Hold on a second. So, if I'm making 34 cents a share, right, and it's costing me $16.50 to buy it, why not $16.52? Well, I already subtracted the 2 cents off the premium. The 2 cents I'm losing, so there's no sense adding it twice. Okay, no sense subtracting it twice. So I take the 34 cents, which is my profit per share. So 100 shares, it's $34. 200 shares, it's $68. Okay, 400 shares, it's $136, something like that. Anyway, I divide it by the purchase price, $16.50, and it comes to a grand total of 2.06% for the week, because this option here expires on the 2nd of August. Okay, each one of these options expires every 7 days. So you have the 26th of August, that expires tomorrow. There's really no money in one day. But next week, the 2nd of August, well, That's 8 days away. The 9th of August, that's 15 days away. That's 2 weeks away. The 16th of August, well, that's 3 weeks away. Excuse me. So, again, if I'm buying it first thing tomorrow morning, 1652, selling somebody the rights through a covered call using a call option. Okay, it gives someone the right, not the obligation, to buy it from me anytime they want between when they pay for it and I collect the premium and the time it expires. This one in particular expires the 2nd of August, next Friday at 4 p.m. Now, options expire on Saturday, but you can't trade on a Saturday, so ultimately it's 4 p.m. on a Friday. So we have a trading group that meets every morning, Monday, Tuesday, Wednesday, Thursday at 9 a.m. We take a look at all the current trades that are currently available. We buy them, and then on Friday at 3 p.m. we jump on to see where they are. Do we have to do anything? Do we have to buy anything? Do we let it expire? What's going on? We take a look at the numbers on Friday afternoon, because we buy on Monday, we collect all our premiums, because that's when the premium's the highest, on a Monday or a Tuesday, and then we take a look Tuesday, Wednesday, Thursday, just to see where they are, to balance them out. And we talk about them here too, so we always know what's going on with the stocks we have in our what do you call it, in our portfolio. So, that being said, safe, predictable, consistent, 1% per week. How do I get it? Right there, Macy's 1652. I sell the 1650s. I collect 36 cents. That 36 cents is 2% of the purchase price if I like Macy's. And I do. I actually bought some Macy's. Okay? So that's the question. Do I like Macy's? Do I like it at this price? Well, they've been in business for over 100 years. Why wouldn't I? So hopefully that answers your question. Which Ford calls did you buy? All right, Bobby, I didn't buy the calls. You weren't paying attention. Okay? Now, just to let you know, Bobby, if you really want to know, okay, this chart behind me is live on YouTube. What does that mean? That means that this whole session, this whole evening, is fully recorded on YouTube. You can watch the whole thing from 9 o'clock all the way until we finish on YouTube. Okay, you can see every single live show that I have done since the beginning of January on my YouTube channel. All right, so if you really want to find out what that trade was on Ford, I think it was a 5% trade. Okay, it was right there. I went over the numbers. How many different stocks do you hold? Too many per account, blah, blah, blah. So you buy and sell every week. Yep. How do you get to 1%? Already went over that. Which phone call I did. Okay, that's already there. Thoughts on tomorrow, Sam? We'll find that out tomorrow. SPY, nope. SPY tomorrow, nope. Man hates QYLD so much. Well, John, think about it seriously. Seriously think about it. Honestly. QYLD is giving 11%. Okay, great. If you don't really care about your money, fine. Put it there. I don't ever tell people what to do. I sure as shit wouldn't do it. I get a safe, predictable, consistent 1% every week. Why would I settle for 11% per year? Seriously. I mean, it's like... Never mind. I'm not even going to acknowledge that. QYLD is for income. Seriously, dude? You put your money there and it gives you 11%. Okay, great. Apparently... Alright, I'm not even going to get... Don't even get me started. 10, 12, but wait, it gets... Yes, it does. Bobby, if you want me to take a look at Maxon tomorrow, it is what it is. Smoking chicken and fish, yeah. Alright, just joining. How do you find covered calls you want to sell on a stock you want to keep? James, I'm going to let you know I'm here every night, 9 p.m. to 11:30. I'm past my time. I'm about to turn into a pumpkin. I'm going to get off of here and get some rest. That chicken quesadilla was yummy, but I probably shouldn't have eaten it. Joseph, if you really want me to take a look at ASTS, we'll take a look at it tomorrow. The list of dividend stocks and looks each time to pay the dividend, blah, blah, blah. What if nobody buys it for more? Doesn't work that way, Charlie. If it is listed here, if the market maker has it listed, it is his job to fill it at the price he has listed. Okay? It's not as if he says, no, I don't feel like listing. No. If he posts it, he has to fill it. That's at the market price. Limit order, totally different story. He doesn't have to fill it if he doesn't want to. All right, Bobby Z, STS is on the top 10 long hold list. Yeah, we'll check that one out tomorrow if you got the guts to show up, Bobby, because I've never heard of it. If I've never heard of it, it's going to be a definite no for me. What monthly fee is it for the trading group? It's $100 a month. CMG's on the website, I think it's $100. Yep. Mara, we'll take a look at Mara tomorrow. Sleep time. Yep, you got that right. Website. The website is the 10-minute trader. It should be right here. Where is it? The 10-minute trader. Okay. Now, I've had the 10-minute trader. If you actually look up the10minutetrader.com, you will see that I've owned it for over 20 years. Okay, I have been here for quite a while. Now, I'm only new on what we call TikTok because someone was stupid enough to show me how to use it. What about Siri? I love Siri. We can take a look at Siri tomorrow. I see Mara tomorrow. Wicked reward, 5%. Really? For Mara? Chris Martin, 11.54 to 16 cents. Okay. Mara to 21. Let's see, Mara. M-A-R-A. Yeah, I'm gonna pause on Mara. It's still going down until it finds the bottom. There's no sense even looking at it. Sorry. Chris Martin, not 5%. Well, let me see. All right, so Chris Martin, you really want to challenge my math skills. All right, here we go. Here's the trade right here, sitting up, waiting to be filled tomorrow morning. All right, so let's go over a little bit of creative math, Chris. All right, what I'm going to do is I'm going to come over here to the very far left, and I'm going to do a duplicate trade. Create a duplicate order. Wonderful. There it is, a duplicate order. 20 contracts, 2,000 shares at the limit order. So here we go. Are you ready for this? Are you ready for this, Chris? You ready? Here's the order right here. I'm going to buy 20 covered Ford 100. Those are the weeklies. 26 July 24. That's next Friday. The 11.5 call option on Ford at 11.18. Limit order 2 open. Wonderful. Okay, my break even. 11.18. Maximum profit $640. Let's whip out the calculator. Calculator, $640. Great. There it is. That's my profit, $640. What is it costing me to do this trade? This trade is $11,153. $11,153. Oops. I hit the wrong button. I can do it all over again. It happens. See, this is why I have a practice account, because every once in a while I hit the wrong button. 640, my max profit. See over there, 640, maximum profit. What's it cost me for the trade? $11,153. Hit the equal signs, and it is, tra-la-la, you ready? 5.738%. 5.738%. Your math is wrong somehow. Chris, okay, 4.7. No, your math is wrong. 5.73. Now, this is a margin account. Huge difference. Yeah, I get it. I get what you're saying. Okay, the numbers are right there. All right, so get out of there. Let's get out of there. Let's go right. Okay, right there. You're looking at single. All right, single. There's the premiums. The 11s is going for 35 cents. The 1150s are going for 15 cents. Okay, fine. Now I want to do a covered call, so I'm going to change it to a covered call where the stock and the options are tied together. I like the 1150s. 1150s right down here. I click on this. Boom. There you go. All right. 10 contracts. Blah blah blah. There you go. There's my profit. 430. Do my profit, gotta clear this, 430 divided by what is it costing me? $5,466. Boom, there you go, 7.8% return. Okay, that one's 7.8%. The other one was 5.7. Take your pick. Which one do you want? Okay, Chris. Okay, I just showed you twice. All right? Is that Trading View? I have no idea what that means. Trading View. I just showed you what the trade was. Buy 10 covered forward 100. So those are the weeklies. Okay, 2 August 24. That's next Friday. Okay, the $11.50 call option along with the forward stock at 11:07. Limit order to open. Okay, the break even 107. Maximum profit on this particular trade $430. What is it costing me? Well, if it was all cash, it would be $11,070. A margin account $5,466. This happens to be a margin account. Okay, those are the numbers. August 24 is 3 weeks out. No. 2 August 24 to the 2nd of August 2024. See? 2 August 24. The 2nd of August 2024. Not the 24th of August. Okay? 2024. That's where the 24 comes in. 2 August 2024. That's next Friday. Okay, why would I do 4 weeks away? Just doesn't, 3 weeks out. Just doesn't make sense to me. Okay? 1 week, that's tomorrow. Not enough money there. Next Friday, yeah, fine. 8 days. Okay, those are the numbers. Okay, the numbers are right there, automatically fills. Okay, my break even, my maximum profit, what's it costing me? All cash, what's it costing me in margin? Okay, I just so happen to have a margin account. I have a cash account and I have a margin account. Now, if it was all cash, let's change that. Get this out of here. $430 divided by 11,070. An all cash account, it would be 3.88%, just a smidge under 4%. How can you go wrong? It's a Ford Motor Company. They've been around for 100 years. Why am I continuing doing this? It's almost midnight. You guys have a great day. I'll see you again tomorrow. So, not worried about the 35% loss and $5 billion a year. Obama, oh my God, really? Ford has been around since the 1900s. They've seen World War I, World War II, Korea, Vietnam. They've seen the stock market crash. They've seen the Dust Bowl, the Great Depression. They've seen the oil embargo. They've seen, what do you call it? The COVID crap, Y2K, all the wars in the Gulf. And yet they're still increasing their dividends, and they're still in business, and they didn't take any bailout money from the government. I don't see them going out of business. Do I worry about that? No, I don't. Terribly sorry. I like Ford. I don't think they're going anywhere. But it is what it is. You buy what you think is right for you. I will buy what I think is right for me. I don't give people advice. I just tell people what I do. Now, you just saw me do a trade on Ford. Well, that probably means that I like Ford and I'm okay with it. No, it has nothing to do with politics whatsoever. Okay? It's, I like Ford. They've been around for over 100 years. I like General Motors. They have great premiums. Okay? The Ford Motor Car Company book value is $14. The stock is 11. How the hell can you go wrong? In my humble opinion. And remember, it's just my humble opinion. It's not advice. I don't give any advice. I'm just saying, I like Ford. I'm going to buy Ford, and you just saw me put in an order for 2,000 shares of Ford for tomorrow morning. If it feels, great. If it don't feel, big deal. I'll go on to something else. I really honestly don't care. Ford is just 1 out of 300. They didn't lose a bundle on EVs. Well, of course they did. Because the stupid administration says, hey, we want electric cars. They didn't ask the public. Okay, didn't Ford learn a lesson with the Edsel? Well, we think the public's going to like this. Fuck no, we didn't like that crap. We don't like gas. We don't like electric cars either. I personally like to get in, turn the key, and I want to feel the rumble of that motor. Terribly sorry. I'm not that keen on electric cars. Are you giving me stock picks for the $100 a month. Okay, CMG, I don't give stock picks. I just give the stocks that I like. Okay, I show you what I like. Right? When I show you what I like, it is up to you to do the research. When I say I like Ford because it's been in business for over 100 years. I like Ford because the book value is $14.78 and the current stock price is only $11.23. I also like Ford with that big ass drop they just had. There's going to be people jumping on that tomorrow. Okay, I like it. That's it. You don't have to like it if you don't like. Now, I have 300 stocks in my portfolio. Every week, I send you, as a member, I send you a list of what I'm looking at. You have your choice to take a look at what stocks I'm looking at. So, when I say, hold on a second. Let's go here. Let's go. Oops. How about we get out of here altogether and we go to some place that we actually like. Okay, now, when I'm looking at this list here, okay, take a look at this list and you ask me for a quick question. Bank of America, General Motors, Occidental Petroleum, Coca-Cola, Paramount, Boyd Gaming, Hewlett-Packard, Heinz Ketchup, Mondelez, and U.S. Bank. Okay, which one of those don't you like? That's Warren Buffett's list. I never, ever, ever question Warren Buffett's list. If it's good enough for Warren, it's good enough for me. Is he recommending it to me? No, he's not. Please give easy access to get in touch with you. Okay, right here. Go to the top left. You see where my pretty little face is there on the top left? It says dividend investing for weekly cash flow. If you click on that, that'll get you to a little envelope that will allow you to send me an email. Okay, send me your phone number. I'll give you a call. I love talking to people. Really do. I especially love talking to people about a subject I'm passionate about. I don't know if you noticed, I'm more passionate about this subject. I think everybody should take responsibility for their own money and to invest it safely, predictably, and consistently. Okay, we little guys have been screwed over long enough by the big guys and the big banks and whatnot. Of course, we're gonna get screwed. No matter what happens, no matter who sits in that big chair in the Oval Office, we're gonna get screwed. We always do. Okay, I'm helping out the little guy make a safe, predictable, consistent 1% per week. That's over 50% per year. If you can get your money in order and you can make 50% per year, well, hypothetically speaking, the rest of your finances should fall into place. Anyway, all that being said, we're past midnight. I'm definitely going to turn into a pumpkin. You guys have a great day, and we'll see you again tomorrow. Come on. Ooh, we're still live down here on YouTube. Sorry about that, you guys. You guys have a great day. We'll catch you again tomorrow.